Talk about 3 different ways to get money for your business using equipment as collateral, one of which actually can get you cash if you already own equipment. The other 2 will help you get and acquire the actual equipment that you need. Look, by the end of this training, you're going to understand everything you need to know about equipment financing, including how to actually get it. And this is very important, and here's why. A lot of people are using loan proceeds, credit line proceeds to try to buy larger pieces of equipment that they need. But there's specialized financing for that. And it's actually way easier to get than you think it may be. As a matter of fact, we can get financing up to $5 million for equipment. And so if we use financing specialized for that purpose, that helps us save more cash to actually grow our business when we do get loans and credit lines. As a matter of fact, I'm going to teach you how to stack funding and actually use other kind of financing to even pay the small down payment required for equipment financing. You're about to get it all right now. We got a lot to dive into, so let's get started. Okay, so I'm going to adjust my camera a little bit here because it's a little bit crooked, it looks like on my end. Well, that was kind of weird. All right. Hello, everybody, and welcome to our stream on equipment financing. I had technical difficulties there if you're all hanging on. Okay, so by the end of this training, you're going to know everything you need to know about equipment financing. Why do we need to know this? Because a lot of business owners are using loan and credit line proceeds and even cash to buy equipment when you absolutely don't have to. Look, you can get equipment financing even with bad credit. You can get it even as a startup business. You can even leverage you or somebody else's equipment to get money. There's a lot of strategic ways to use different types of equipment financing to fund your business. And we're going to talk about this right now so you can think about equipment you may be able to actually buy and be able how cheap it is to do so, to actually leverage equipment you already have, or even be able to actually use this kind of financing to get equipment that you may need so you're not actually using cash or other kind of financing to do it. All right, so let's dive in. So equipment financing, there's 3 types of equipment financing we're going to talk about today. Now, what equipment financing is ultimately it's used to purchase all different types of equipment. I mean, we have manufacturing companies that purchase big machines, the people that are in heavy equipment that actually purchase bulldozers, things like that. Truckers are using a type of equipment financing to oftentimes buy trucks, like over-the-road trucks. And then we even have like office settings where we're able to get equipment financing for pieces of equipment that might not be computer size, but might be a little bit larger or a little bit more valuable. So equipment financing has a lot of different purposes. And this brings me to an important point. You need to know about specialized financing like this. Specialized financing is financing for the sole purpose of doing X. Now, in this case, X is anything to do with equipment. Here's why it matters. Because if you are wisely using specialized financing to do what it is intended to do, in this case, leverage against equipment to get you money or buy or lease new equipment that you need, then this allows you to then get loans and credit lines and just use that money for whatever you may need. Okay, so I'll give you an example. One of our clients came to me, one of my friends came to me, and actually we needed a big piece of equipment for a doctor's office that she had. And so what she was doing was looking for a credit line to buy the equipment. I said, that's not what you want to do. What you want to do strategically is stack funding. So we want to get you equipment financing to buy the equipment. They're going to want a down payment for that financing, let's get you a credit line and use the credit line to pay the down payment. So in this scenario, she got equipment financing with no money down and also got a credit line that she could use for other purposes outside of equipment because the equipment was actually purchased with equipment financing. This is the smartest use of capital. Anytime we can get specialized financing like this to get real estate, to get equipment, even utilities, we can actually get specialized financing for it. We want to. That lets us save our personal guarantee and save our ability to get financing, to get loans, credit cards, or credit lines we can use for other purposes. Okay, so all of that being said, there's 3 types of equipment financing you really need to know about, but let's give you an overview of loan amount, size, terms, things like that. So equipment financing can ultimately typically go a very, very, very long term. I mean, it can go up to 30 years, especially if you're looking at like SBA type financing. Now, a lot of equipment financing is typically financed up to about 3 years. So 3 years and 2 to 3 years is like on the low end term for lower cost equipment, all the way up to 30-year terms. Now, the interest rates all over the board depending on your risk, but credit scores go down to 500. So a lot of equipment financing is available as low as a 500 FICO score you're able to get approved. And loan amounts go as high as $5 million. So you're able to get loan amounts for very large pieces of equipment or for multiple different pieces of equipment. You're able to get really good terms and you're able to get low rates even when you have challenged credit. By the way, Mike South is in the house from St. Louis. If you're just coming in, give me a shout out here, give me your company name, and I'm going to give you like free exposure, a free shout out here on the live stream. So there's 3 types of equipment financing you should know about, third of which very few people know. The first is just equipment financing. And this could be obtained by a brand new business. You could actually get this kind of financing to get equipment to launch a brand new business, for example. And you can also get equipment financing with very bad credit. So you're able to get equipment financing even if your scores are as low as 500 FICO scores. So you can get it with bad credit. You can get it as a brand new business. It's financing that most business owners are able to qualify for if you have an acceptable piece of equipment. What is an acceptable piece of equipment? There's lenders for all different types of equipment you can imagine. But keep in mind, when we're talking about equipment, we're not talking about computer monitors here and cameras, for example. We're typically talking about higher dollar equipment, usually larger equipment that we might see in a warehouse, a manufacturing facility, for example, or many, many different examples. We just don't want to go and think we're going to use equipment financing to buy a bunch of home computers to put in an office, a bunch of computers for office workstations, right? We can get financing through HP, Apple, and Dell, business credit financing for that. But equipment financing is usually for larger, more valuable pieces of equipment, not a bunch of little pieces of equipment like computers that we lump together and get financing for, okay? So equipment financing, startups, bad credit, up to $5 million. Then we talk about the second type of equipment financing, which is called equipment leasing. Now, equipment leasing is just harder to qualify for than equipment financing. So with equipment leasing, we're actually leasing the equipment and we're getting lower interest rates. And we also need to be in business 1 year and have better credit, like a 620 FICO score in order to get approved. So equipment financing, startups, bad credit, we can get loans up to $5 million. Equipment leasing, still loans up to $5 million, but we need to have better credit. And we also need to be in business 1 year to typically get approved. Now, I actually just thought of a fourth type of equipment financing I'm going to bring up as well. And that is really equipment lines of credit. So you can also get a line of credit you could use to buy new equipment or even borrow against equipment that you already have. So it doesn't necessarily have to be a loan. It can be a loan or a line of credit. A lot of banks will give you the option for both. So we talked about equipment financing. We talked about equipment leasing. We talked about using them to actually get a loan or a credit line. The third type of equipment is something that a lot of people don't know anything about, and it is called equipment sale leaseback. So what we're doing with this kind of financing is taking equipment you already have. Let me give you an example. My buddy Chip owns a plastics manufacturing company, and I went in there and he wanted his money for his business, and he wasn't able to get it from his bank. And I said, well, you have a lot of pieces of equipment here. Do you own this stuff free and clear? And he said, yes. I said, Chip, you could leverage any one of these pieces of equipment or multiple to actually get the credit line or to get a loan for the money that you need. And that's exactly what we did for him. So with equipment sale leaseback, what we're ultimately doing is we have equipment we already own. We are selling it back to the lender. We are selling it to the lender, and they are leasing it back to us. Now, once we pay off all the payments, the equipment is ours again. So this is just a creative way to leverage equipment you may already own or somebody else may own. You might have made a mistake and come to the stream and go, oh man, I used cash or a credit line or a loan to buy the equipment. I didn't know I could have got financing to be able to do that. That's okay. Then we want to use equipment sale leaseback to leverage equipment you already have to borrow against to get the money back out. So equipment sale leaseback is when you're using your equipment or somebody else's equipment as collateral to be able to borrow against to get cash back, to get financing, not just to buy the equipment, to actually use equipment you've already bought and to be able to get a credit line or loan using and leveraging that equipment to be able to do so. There are three main types of equipment financing. Financing in itself works for new businesses, bad credit, leasing, a little bit better credit, 1 year in business, and equipment sale leaseback. We're actually talking about borrowing against equipment that we already have. In Credit Boss Business Credit says agriculture equipment, perfect example, okay? I'm a farm boy from a little small town in Indiana where, I mean, literally, if you look at my house, it's like my house is here and it's just nothing but farms as far as the eye can see, right? So I'm very, very familiar with agriculture and farming equipment. This is a perfect example. Look, a lot of people may think equipment is a machine in a factory, but the reality is a lot of equipment financing has more to do with vehicles than anything else. So what I mean by that is if we talk about agriculture equipment, these are combines, for example, tractors. Well, there's a type of equipment financing to be able to buy those things. We can also get this kind of financing to buy 18-wheelers, to buy over-the-road trucks, for example. So a lot of truckers that we're dealing with and helping that are trying to get truck loans, we're able to use a type of equipment financing to actually get those truck loans. By the way, 77T Adams is in the house. Thank you very much for coming in. Always love it when you're here. So equipment financing, equipment leasing, equipment sale leaseback. Yeah, it could be equipment in a factory, but it can also be a lot of type of other equipment as well, such as to the point here of Credit Boss Business Credit. It also can be used for things like farming equipment. Tractors, combines. It can be used for over-the-road trucks. It can be used for a lot of the cases, basically vehicles as well. Okay, so there are some special rules though for long-haul trucking companies. You need to have at least 2 units in your fleet and be in business about 2 years or more. That's a common requirement with a lot of equipment financing sources out there. And this just shows you can actually operate at a certain scale and have experience in the field. So some things there to keep in mind. So that being said, equipment financing matters a lot, right? It frees up capital that you could use for other needs. And it also helps you stay competitive because you're not waiting to buy equipment because you need cash to be able to do so. Usually with equipment financing, all you really need down is about 2 months worth of your payment. So usually with equipment financing, you're going to actually get approved and have just 2 payments as being required for down payment. If you have that, you're typically able to get approved. And 77T Adams says Wells Fargo will fund equipment, a hydraulic dump trailer. Yeah, very much so. And again, to 77T Adams' point, he's saying a hydraulic dump trailer. So again, a lot of equipment financing has more to do with vehicles on the road, heavy equipment type vehicles, trailers, these kind of things, than it just does what we would think equipment is, which is equipment sitting in an office. It can work for any of those different types of uses. So construction company replacing old backhoes is one example. For example, a trucking company adding 2 more trucks, a printing shop upgrading printing equipment within their actual facility. These are all use cases of where equipment financing can actually work. So now you know, equipment financing, we can get financing, leasing, or we can get sale leaseback to borrow against equipment we already own. We can get loans or we can get credit lines. We can get approved as a startup, even with scores down to 500. We can get loan amounts up to $5 million. We can use this kind of financing for equipment that's like in a facility, like a print shop, or we can use it for equipment that's actually on the road somewhere, like trailers and backhoes and tractors, for example. The purpose here is to use specialized financing, like equipment financing, leasing, to be able to actually buy the stuff we need so we can free up our cash flow, our loans, our credit lines to use for other purposes. Typically, you can get approved with a minimum of about 2 months down payment, but we can stack financing and use loans and credit lines to be able to get and cover that 2 months worth of payments as well. And there you have it. There's everything you need to know about equipment financing. If you're interested in getting approved for any type of equipment financing or any of the other 100 type funding products we have that are offered through over 1,000 different lenders, all you have to do is go to creditsuite.com/get funding. That's creditsuite.com/get funding to get approved. Hey, did you get value from this training? If so, smash the like button. Make sure you subscribe and keep your eye out for our next training. We're talking about more cool ways to get the money you need to start and grow your business. Take care. Oh, and wait, one thing. 770 Adam says, hey, got one of business and use that for both businesses. I love it. And it says Ally Bank will do financing for 2 trucks. That's great. I can tell you, we work with over 1,000 lenders. And I can tell you that we have more lenders in the equipment space than anything else. There are so many lenders for every type of equipment that you could imagine. So keep that in mind when you're looking to get financing for your business or financing for equipment. We can help you along the way. Plenty of other sources out there too. There's probably more sources in the equipment lending space than any other type of funding that's out there for businesses. Thanks for tuning in. If you missed any part of this, go back and watch it in its entirety on the platform you're on, YouTube, LinkedIn, or Facebook. And I look forward to seeing you on our next stream where we talk about more cool ways to get the money you need to start